This voice is taken from an article with the title, How Do I Use Pivot Points for Support and Resistance Levels, which has been published on TraderTalks.net. Answer. One of the most popular methods said by Forex traders to identify support and resistance levels is by using pivot points. A pivot point is a technical analysis indicator that is used to determine the overall direction of a currency pair or other financial instrument. It is calculated by taking the high, low, and close of the previous day and then plotting them on a graph to create a line that can be used to identify the trend. A pivot point is also used to identify potential support and resistance levels. The most common method used to identify pivot points is the pivot point method. This method takes the high, low, and CLO/SING price of the previous day and calculates a pivot point for the current day. The pivot point is then used to identify potential support and resistance levels. The support level is calculated by subtracting the previous day's high and low prices from the pivot point. The resistance level is calculated by adding the previous day's high and low prices to the pivot point. Another method used to identify pivot points is the Fibonacci method. This method calculates the pivot point by taking the high, low, and close of the previous day and using Fibonacci ratios to create a line that can be used to identify support and resistance levels. The Fibonacci ratios are based on the Fibonacci sequence, which is a series of numbers that can be used to identify support and resistance levels. Once the pivot point has been identified, traders can use it to determine when to enter or exit a trade. If the price of the currency pair is above the pivot point, it may be a sign of an uptrend and traders may want to enter a buy position. On the other hand, if the price of the currency pair is below the pivot point, it may be a sign of a downtrend and traders may want to enter a sell position. Traders can also use pivot points to identify potential entry and exit points for trades. For example, if the price of the currency pair is approaching the resistance level, traders may want to exit their positions as it is likely that the price will not go higher than the resistance level. Conversely, if the price of the currency pair is approaching the support level, traders may want to enter a trade as it is likely that the price will not go lower than the support level. Using pivot points for support and resistance levels can be a useful tool for traders to identify potential entry and exit points for trades. By understanding how to identify and use pivot points, traders can better manage their risk and increase their chances of success in the Forex market.